Welcome to Barchart's What's Next in the Derivatives Industry. So much has changed since 2000. Demutualized and publicly traded exchanges, electronic trading, cloud computing, mobile, networks and processing power, a fintech boom, zero commissions, crypto, investor education and access, now AI, and continued technology and product innovation. So as I reflect back on this period, there's so much to talk about. Yes, what's next, but also the events that have led up to today. So now I'd like to introduce you to our keynote speaker, Erika Olson. As mentioned, Erika is the author of Zero Sum Game, which chronicles the merger of century-long rivals, Chicago Board of Trade and CME in 2006 and 2007.
The Board of Trade's like decades-long enemy / rival, the Merck, had gone public, and they saw how much those members were making, and they're like, we need to get our act together. Bernie has a very unique personality and is one of probably the only people I think could have achieved this, because you have to be the kind of person that hold the hand of people that had been in this business for decades, allay their fears of their lifestyle going away because of change, because change is scary, and take them kind of into the future. Over 100 years of history, with the Merck being founded 50 years after the Board of Trade, and then both these exchanges trying to combine several different times, it really took the friendship of Charlie Carey, who was the chairman of the Board of Trade, and Terry Duffy, who was the chairman of the Merck at that time. They had grown up together in the hog pits. They both rose up through the ranks at their respective exchanges, and met over, I believe, many steaks and cigars, and hammered out a deal. And so the deal couldn't happen until both exchanges were public.
We've seen a lot of recent activity in the industry. Broker consolidation like StoneX and R.J. O'Brien, international expansion of like Merex in Brazil, cross-market expansion like Kraken's acquisition of NinjaTrader, strategic partnerships like CME teaming up with FanDuel, as well as Polymarket and Kelshi bringing attention to event markets.
Somewhere during Dodd-Frank, they got the law changed and they took out the economic purpose test for when you create a new contract. And so that allowed the creation of these event contracts. I don't know who did that. I'd like to really beat them out of them, but it happened. The thing with the CME getting into all of this and turning into a casino is they don't remember when RJO started in those early years, where there was this very populist anti-future sentiment where it was equated with gambling. There was cases that went to the Supreme Court. I don't have to pay my futures debts. That's gambling.
Democratization of trading is at a whole different level. And it is because the exchanges and the brokers, they understand that what they really have to do is democratize for retail trading. The trader can have a lot of fun because they can speculate on the price of corn, the price of oil, or they can make a bet on who's going to win the Super Bowl, who's going to win an election, when Taylor Swift's going to have her first baby.
If we're thinking about innovation in derivatives, specifically into whether the new products can be offered, right? So we already have weather derivatives, carbon-focused derivatives. I'm not going anywhere given where the regulatory is. So then we're starting going into the events, and that's the right move to do, right? And always go back to the regulatory pressure. It accelerated the debate on, is it a casino?
I have never worked with ICE, so it's all kind of hearsay and observation. They continue to go through asset class to asset class, front to back. And not only are they good at the traditional asset classes that we talk about, right? But they've also started, I think they started to do a mortgage business which was a market business. So that's is the essence of, like they know who they are.
Yeah.
They're market makers and they're just going from asset class to asset class. CME FanDuel, I think, is a similar, trend. I agree with you that it's trying to capture a new market segment that they have not been able to maybe touched before, and then gamified.
In 2006, so 20 years ago, the option industry was doing 5 million contracts a day. By 2018, we were doing 20 million contracts. In 2026, we're doing 68 million contracts a day. And then a lot of that has been driven by retail growth. We used to be third Friday, then we introduced the monthlies, then we introduced the weeklies, then we introduced the Monday, Wednesdays, and then in 2022, we finally introduced the dailies, the filled in the week with the Tuesdays and the Thursdays. What's next? I'm guessing we're going to see nooners and we're going to see hourlies. They're coming.
We think we're still in very early innings right now when you look at the world of retail. If you just follow the money and you follow the bodies, active, smart, young, intelligent bodies that are coming into the market with a great interest to learn about the markets.
We've seen the retail portion of the market now represent just over half of the overall volumes that we're seeing. So I think with those two metrics combined, the growth trajectory seems really, really clear. And we agree that we're still in the early innings of this growth.
We see a younger demographic continuing to come in with a great bias towards mobile. So as we build feature sets, we continue to focus on delivering engagement and product where customers want to interact with product. We continue to see a lot of growth, a lot of opportunity. And I mean, I've been trading for 43 years. And I've never seen more product, whether that be perps, event contracts, shorter duration options. I've never seen as many opportunities in my lifetime than I have right now.
Technology's come a long way. The early 2000s, which is about when I started this industry, I remember customers having to fill out by hand a 30 to 40 page document. Imagine a retail trader doing that today. If you wanted to fund your account, it was wire or you send a check. And that check either went to your broker's office and was scanned, or you send it directly to the FCM. Ask them if they have a check. Especially post-pandemic, you saw the retail market embrace easy onboarding from a mobile application, being able to trade from anywhere, and being able to fund instantly, whether it's Apple Pay or debit card. These are all major factors that drive the retail into the market. The other thing is information is literally at everybody's fingertips, and you combine that with AI, it gets people engaged and wanting to participate. And then finally, the major macro events that seem to never end, whether it's tariffs, election cycles, wars, but you put those three together and we're going to continue to see more and more growth.
No matter how complex we made the system, no matter how many different analytical tools we put in place, there was always going to be a gap. Because the gap that exists is a knowledge gap. Problem exists between keyboard and chair. The issue was never the tools. We had reached a point where the tool had become saturated. It was good enough and it was a professional level tool, but you couldn't correct the knowledge gap between a retail trader and a professional trader. But with AI, you do. No longer do you need to do advanced mathematical analysis. You need to know that a concept exists. And merely knowing that a concept exists and how to deploy it is something that allows you to be a better end user. We've upgraded the end user. And Barchart is deploying this across our systems. But at the end of the day, AI is just here to unlock our capabilities. It's not to solve our problems. It's just to make us all better and smarter.